What's up, guys? Welcome back to Justin Trading. Thank you for joining me today. In this video, we're going to talk about the SOFI stock. I haven't made a video about it for a while, so I wanted to give you an update because they did come out with an announcement that can absolutely affect the stock price in one way or the other. I also wanted to go over the upcoming catalyst and what we can expect for the Q3 earnings, and then just give you my thought on where I see the SOFI stock price going from now till the end of the year. So let's jump right in. All right, guys, before we get started today, subscribe to the channel for me. Remember to hit the little bell. That way you get notified every time I post a new video. There's also a link down in the top pinned comment to my Patreon account. Come over and join the family. We've got an awesome community over there. Shout out to all the new members that have been joining over the past week. I love you guys so much. Thank you for your support. We do have a few more spots left down on that $10 tier. I think we've got like 5 left. So definitely take advantage of that if you've been thinking about it. That'll get you access to the private Discord where we talk stocks. You'll get links to my portfolio, which is all of my fundamental, like my highest conviction long-term holds. You'll also get access to all of my swing trade setups. So the ones that are on my watch list, anytime I send out a chart, my profit targets, stop loss entry, just so you know exactly what I'm doing when I'm doing it. It's also very educational because then you can learn to identify what I look for as a swing trader. So a lot of technical analysis. Doesn't really matter whether you're a long-term investor based on fundamentals or whether you're a swing trader or want to become a better swing trader. We got what you need. Guys, I'm a value trader. I like to buy stuff that's at, deep value areas, low risk levels. I like to look for value even with my swing trades. So if that's something you're interested in, definitely check it out. We've even got traditional education over there, like videos and books and graphs that you can use to just become a much better investor overall. Day One Squad, I love you guys so much. Thank you for your support. Definitely the best way to support the channel is the Patreon. So if you just want to support me as a creator, be part of an amazing community, come check it out. Real quick, guys, there is my Instagram and Twitter down in the description. Make sure to come follow me on that if you want to, follow me on a more close basis, a more active basis. I will be posting a lot of like alerts, updates, graphs, just anything that I think will appeal or is good to know for investors. So if you don't want to join the Patreon and the Discord, the Instagram and Twitter is definitely the next best place to, follow me on a more, quick, close basis. So definitely follow me there. I would really appreciate that. Again, Instagram and Twitter down in the description. But guys, let's get started. For those of you guys that are new to the channel, I talk about SOFI stock a lot. It's one of my favorite stocks. I do dollar cost average into it. It's one of my biggest holdings. I have been making videos about SOFI since clear back in the SPAC days when it was IPOE. So today I'm going to go over some of the things that I think are important in the short term and honestly kind of the long term as well. But if you want to see a deep dive on SOFI, on like the company and all of their products and what they do and their long-term growth story, I will link those videos that I made that are much further in depth right here to you, so you can go check those out. Today, we're just going to focus on some of the announcements and what I think is going to happen in the next couple of weeks. Guys, first thing they announced that could drastically affect the share price in one way or the other is the redemption of all of their outstanding warrants. So we definitely want to take a look at that. We're also going to go over their Q3 earnings because those are coming up. So I want to give you an idea of what to expect, when the earnings come out and what the stock could do. Then I want to break down the chart for you, give you an idea of where I see the stock price going for the rest of the year, if it's at a good area to add, if we should buy or take profit, those types of things. So let's get started. First thing I want to look at, guys, so this is the redemption of the warrants, the announcement. When I say this can affect the stock price, it's because it can. For those of you guys that are not familiar with warrants, warrants are very similar to an option contract. The main difference from an option contract to a warrant is an option contract doesn't require the company to issue additional shares or create additional shares that will dilute the company's outstanding share total, the float of the company. Honestly, the way you can kind of look at it is an option is kind of like from investor to investor, and a warrant is kind of like from company to investor. Because when you're writing an option contract, I'm essentially saying I want to sell options or buy options, and I have to either, buy 100 shares or sell 100 shares from the market, right? From the general market. With a warrant, that's not the case, but they both have the option to be bought or sold. So I can either, it's just a way of buying shares for cheaper using, some sort of leverage type idea. So I can either say I want to buy more SoFi stock in the future at a fixed price of what it's at today, because I think it's going to go up, or I either think that I'm going to be able to sell SoFi down the road for a higher price than it will be because it's going to go down. So very similar, guys. Again, the reason why this can affect the stock price is because it adds dilution. It puts more outstanding shares out there, which can put downward pressure on the stock. SoFi, doesn't have a ton of them. I think they've got like 20 million, outstanding warrants at this point in time. They are not all going to be exercised, guys. A lot of them are going to expire useless. Some people that own them may just totally forget, not even know the redemption date and not redeem them. So they're not all going to get exercised. Now, there is about 3% of their entire float that would be if all of them got exercised. It would add about 3%. So that's what you could pretty much see the stock get as far as downward pressure is about 3 to 5%. Now, it may not get any, there may be enough, positive out there, and it may have enough momentum to do just fine and not get any downward pressure, moving forward, but we're just going to have to wait and see. Warrants aren't all bad, guys, because, to try to find the positive in it, it does give them, some cash. So it does give SoFi some money from issuing those warrants that they can put on their balance sheet. The other thing is a lot of value investors, they will not buy a stock if they know that there's a ton of outstanding warrants because they hate dilution. And so by getting those warrants off their books, that, kind of puts them in a spot where, value investors, they know that there's a good likelihood that they're not going to get diluted from those actual warrants. Now, it is a growth company and a small cap growth company. So growth companies like that issue shares a lot. So saying that you're not going to see any further dilution is probably, not realistic, but nonetheless, it is a good way to look at it is, it gets it off the books. It gets them some cash. They've got earnings coming up. It could make their balance sheet look better, whatever. But, just wanted to put that on your radar so you know what could happen. As you guys can see here, December 6th is the cutoff date. So if you are a holder of those SoFi warrants, you need to either sell them or exercise them before December 6th, or they will be useless. Okay, so now the next thing, guys, which is absolutely more important, is the Q3 numbers that are going to be coming up and what we can expect. Now, if you guys remember or have been watching my videos or the last video I made on SoFi, in their Q2, when they released earnings, the stock got pummeled. I mean, it was down like 14% on the day that they released earnings for Q2. Now, it didn't necessarily sell off because it had bad Q2 earnings. It sold off because it had soft guidance. That was the big thing, guys. I don't know how many of you know of the student loan, moratorium, the CARES Act. That put a damper on some of SoFi's revenue. It was supposed to expire and end on September 30th, which, student loan refinancing is a big portion of SoFi's revenue. And the fact that they extended it all the way until January 31st definitely took quite a bit of money out of SoFi's pockets. It actually took upwards of $40 million out of their pocket. So I want to kind of point something out here, guys. As you can see here, the consensus EPS estimate is negative 14% or 14 cents, sorry. And the consensus revenue estimate is 255.63 million for Q3. Now, they've had 2 downward revisions on EPS in the last 3 months and 2 downward revisions on the revenue in the last 2 months. Take a look here, guys. During Q2, the stock dipped after giving soft Q3 guidance of adjusted net revenue of 245 million to 255 million, less than the 270.2 million average of 2 analyst estimates. So they were guiding for about 245 to 255, where analysts had thought that they should have done around 270. So we're going to have to see what happens. But I think with the dilution of the warrants and the potential for them to miss on earnings or post less than desirable earnings, like if they post, a slight miss or not as big of a beat, or they don't post really, really strong guidance moving forward, I think they could take a deep hit. I think the stock could get pushed way down, over the next couple of weeks. Now, we're just going to have to wait and see because you've got a lot of odds against you right now. You have the dilution, you have earnings, which is a crapshoot, and then you've got the fact that SoFi's been on a pretty, stout rally since the beginning of September. It's up quite a bit, so it's right at a pretty major resistance level. Now, with that being said, guys, they could come out and blow earnings out of the water. We're just going to have to wait and see. But back to what I was saying about the student loan, refinancing program. That is going to end on January 31st of 2022. So right at the end of this year, or beginning of next year, and they're going to get that revenue back. So I actually think that we could see SoFi in a really good spot for next year because they got that revenue starting to come back in. And I think next year, 2022, is when SoFi's really going to kind of grow into that big growth story that everybody's been looking for. I think that's when they'll start blowing estimates out of the water, raising their guidance tremendously. They've got a lot of revenue growth. They've got a lot of user growth, and they've got the upcoming catalyst of the bank charter. Guys, so the bank charter's coming within the next couple of weeks as well. I saw some analysts say that from other companies that they watched that went through a very similar thing as far as a bank charter approval, it should be coming soon. So I think that recent run up has to do with SoFi getting that approval. I think a lot of people are knowing that that's coming, and it's that preemptual run up to that. If it doesn't get approved, the stock's going to get killed. It's a high likelihood that it's going to get approved, but something you got to consider. So you may not see any downward pressure from the dilution and maybe soft guidance or soft earnings because that bank charter outweighs that and pushes enough upward pressure and positive momentum into the stock. We're just going to have to wait and see. But I wanted to put that out there, guys. I would be real cautious around this earnings because, of the downward revisions, they may not post as good as numbers as investors are looking for. And it may just be the excuse that SoFi needs to push that stock down and have a pullback after the most recent rally. There is a couple of things that I just want to mention, for the bank charter and why that's going to help them so much, guys. I mean, you got to think it's going to increase their lending capabilities exponentially. Right now, SoFi is not allowed to do what a traditional bank does and take its users' deposits and use it to lend out. And so that hinders them tremendously because that is a large percentage of most traditional banks' revenue is using their members' capital to create loans and make the interest off of those loans. So that bank charter will do that for them, and that is going to add to their revenue a lot. The second thing, guys, is it's going to cut down their operating cost. It's going to make them so much more efficient because they're not relying on those third-party banks to give them that capital. The third thing, guys, is it just makes them so much more legit, so much more credible. If without the bank charter, they're just another fintech. With the bank charter, they are an actual traditional bank, which just gives them that stamp of approval and makes them much more credible to a bigger slew of investors. It also, helps them with pricing power so they can create cheaper products, when it comes to financial services. And the very last thing is it gives them the opportunity to capture a much bigger share of the market because all of those things combined. So I think we've got a lot going for SoFi right now. I think that we've got some good opportunity. However, I'm cautious to add to it at this point in time because where it's at on the chart, because the opportunity for the dilution to put downward pressure on it, and the slight chance that the bank charter doesn't get approved. Now, do I think that it's going to get approved? Yes. Do I think that, the earnings are going to be horrible? I'm not sure. We're just going to have to wait and see. But wanted you to keep that in mind. The last thing, guys, let's take a look at the chart. And I want to kind of give you an idea if these are areas that we should buy or where are some good levels that we should look for. So for those of you guys that have watched the channel, I mean, this is a familiar chart. For those of you guys that have not, you may not have seen me look at it before, but, big rally, guys, during the SPAC craze at the beginning of the year, reached that high point, $28.26, before getting rejected and dumping all the way back down to $13.14. Guys, I made a video on it like right around that time. I added to it on that day at $13.42 because it was just too low. The one thing that I love about what SoFi did at these levels is it got dumped on during the SPAC craze or the SPAC dump when all of the small cap growth stocks, all the SPACs were getting killed. It found its bottom, tested it once, twice, and 3 times without breaking that level, had the attempted rally. Unfortunately, it made a lower high than the previous discernible high and dumped again to make a lower low than the previous discernible low. However, it did not break its mid-March lows. That's what I love. It broke it a little bit, but most of those SPACs, guys, I mean, it broke it in the sense of a lower close, where this was just an intraday low. But with that being said, most of the other SPACs, they broke their mid-March lows, during like June, July, when all the stocks ran for a couple of weeks and then dumped again. And SOFI was able to maintain. That's a lot of strength, guys. That shows that SOFI is an outperformer. It shows that they're displaying much more strength than a lot of the other growth stocks and SPACs out there. Now, we are currently sitting up here at that pretty major inflection zone. Guys, this is a pretty stout rally that SOFI has been on ever since the beginning of August and beginning of September. I mean, that's upwards of, that pretty much doubled over the course of like a couple of weeks. Not quite, but pretty close. It reached that high point of $23.63 and has been pulling back the last couple of days. Guys, these are not the levels to buy stocks at right here. You do not want to buy a stock when it's sitting at a major resistance level, a major inflection point, because you've got so much downside. Like I said in the beginning of the video, guys, I'm a value trader. I want to buy stocks at inflection zones. I want to buy them when they're confirming the bottom. They're making a reversal. They're on a deep retrace after a big run up, because you're just minimizing your risk and you're creating such a better risk to reward. One thing I want to point out, guys, for those of you guys out there that are mainly long-term fundamental players, long-term holders, I know a lot of people say you should never mix fundamentals with technicals. But let me just kind of throw this out there. You may look at a company and you may just absolutely love the fundamentals and you're planning on holding it for the long term. So you jump in and you buy it. But if you don't even look at the chart and you have no idea how to read a chart, and you buy it while it is butting up against a major resistance level, and there is a long ways till the next support level, and you buy it and it gets rejected and dumps, you may say, oh, well, I'll just average down. But that's a lot harder to do. You start averaging down, it's going to take a lot to get down there. And it may fall and correct for months and months and months and years even, so that you've got to look at the chart, guys. Why would you not find a stock that you really like the fundamentals on, look at the chart for the optimal entry point, and then buy the stock when it's at critical support, or it's making a reversal, or it's broken resistance and back tested it, something like that. So I do not believe that you should not learn how to do both. You need to learn fundamentals and you need to learn technicals for those types of longer term holds. Now, if you're strictly swing trading, like on a short term, week to week, month over month, you should not combine those two, because you could get stuck in a trade that is dumping and you're on the bottom end of it, and you could hold it just because you're like, oh my gosh, I love the company, the fundamentals are so good, and you start justifying holding the trade because you don't want to take the loss. That's when you should not mix them. But on the other side, you absolutely should. I just wanted to throw that out there, guys, because a lot of people, I feel like, get that confused and don't understand that. Now, there's a couple of ways to look at SOFI's stock. Again, you have a lower low or a lower high than the previous high. You have a lower high than the previous high. SOFI is in a downtrend, guys. I mean, you did have a supply line and it did break the supply line and it did back test it, which is great. But again, you made a lower low. So all this could be is an attempted rally just to make a lower high, confirm it, roll over, and dump again all the way back down to the inflection zone. Who knows? Until we get that strong follow through price action to break that previous high, we don't know. And so I wouldn't buy it right here if you don't currently own it. And if you do, I wouldn't even add right here. I would wait, because there's a couple other scenarios that we can look at. If we drop down to the 4 hour, but first, if you look right here, we do have kind of a classic accumulation structure, a 3 rising valleys, as you can see. We can see it a little bit better on the 4 hour, but you can see, and you can look at this one of two ways. You can either say this is your first valley, second valley, third valley, and it broke the highest peak of the structure, which confirmed the pattern and is now back testing the top of the highest peak, the breakout level. However, I would rather look at it like this is the first valley, just because I like my valleys to be very symmetrical and very similar in size and shape. And this one's just a little off. It's not quite a valley that I would like to call, and I feel like this is the more conservative way to look at it anyways. So you have your first valley, second valley, and you're developing your third valley. So you would need to hold this level, build and then run up, break this highest peak right here to confirm the pattern, and then you would be off. Now, I would not take the trade once you broke and confirmed the pattern until you got above $25.14 and back tested it as support. Once you do that, you're in the clear. You can take the trade because at that point you can set your stop loss under the inflection zone and you've got a much better risk reward. At these levels, you don't have that. Now, another thing I want to point out, you have hidden bullish divergence, clear as day, right here, lower levels of negative momentum. So you go from this low to this low, which makes a clear higher low and makes a lower low on the MACD, which is impending price action continuation to the upside. That is exactly what you want to see on these types of structures, is that hidden bullish divergence on the way out. What you could do is you could even see it build, more positive momentum as it breaks this 2173 spring, back test it before, confirming the pattern. But I think you really don't want to break 2173. It's not really breaking it. It's the follow through, price action. However, I think if you break 2173 and you can't get back above it, you're going to see 1818. And I think there's a high probability you'll probably even see 1475. So you want to hold on to these levels, guys. If you were using this as your first valley, your measured move would go from this high right here, this peak, to the lowest low of the valley. However, we are using this as the first, so your price target would be the measured move of the highest peak to the lowest valley, and that would put you up there at $31.77. So that's absolutely where the SOFI stock could be going. This is a very similar situation to that upstart chart we looked at. There was a really nice structure and pattern on the daily. It was very similar to a double bottom, and then there was a 3 rising valleys on the weekly. This one is a little bit, reversed or backwards. So that's one way, guys, and that's really nice looking. I mean, if it breaks that, if it breaks 2514, back test it, you could see massive days. You could see this thing run to much higher prices, have a breakout 20% day to the upside, especially with everything that it's implying with the hidden bullish divergence. You're over your moving averages, you're in the bullish control zone on your relative strength index on multiple time scales. So really nice looking there. The next way to look at it would be on the 3-day or the weekly, which would be this massive double bottom pattern. Now, guys, this is technically called a Eve double bottom. Comes from the Thomas Bulkowski pattern, the Adam and Eve double bottom, which is an Adam and Eve double bottom is a V-shaped bottom on your first bottom and a rounded shaped bottom on your second bottom. However, doesn't matter. Still not confirmed here. You would need to break out of this, this midpoint, this middle of in between the peak between the two double bottoms before you are confirmed. So you would want to see it break again, back test before running to $35.08. So you absolutely could use the first target on the 4 hour with the 3 rising valleys, and then play the 3-day double bottom. You're just going to have to kind of wait and see. One thing I want to point out, guys, is you have the highest level of positive momentum on the 3-day that you have ever seen in SOFI. You're sitting at 63 on the relative strength index, so you're right at the bottom of the bullish control zone. You could see much higher prices in SOFI if the stars happen to align. One other thing I want to point out, guys, that I think a lot of people miss: why is this 2514 the major inflection zone instead of that 2826 level at the all-time high? Because as you can see here, that 2514 is the all-time candle high close. So you got rejected back here in January, sharp reaction away from it. It takes a rally, it runs up and makes a super high intraday, but you had your highest candle high close up here at that 2514 level initially. So that's your level of inflection right there. That's what matters. You got to get back above it. So let me know what you guys think. If you guys agree with my analysis, let me know down in the comments. If not, let me know as well. Come over and join me at the Patreon if you want to learn this stuff, if you want to, become a better swing trader. This video is for entertainment purposes only. I am not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. And have a good weekend. I'll see you guys in the next one. Peace.